What up, crew? In the last live stream, we spoke about trend lines. This is absolutely fundamental learning for technical analysis. So here's a step-by-step tutorial. Stay tuned until the end. In very simple terms, first we need to understand what is a trend line. A trend line is simply a straight line on the charts which connects two or more swing highs or swing lows. These lines help us to visualize the market direction, and they also act as dynamic support and resistance on the charts. They're very, very important. They clarify our bias. They help us to time our entries, and they also help us to manage our risk. Very important is, of course, to understand how to properly draw these trend lines. You can go very wrong if you are drawing these trend lines badly. First of all, of course, you need to open up either your trading view chart or your Bybit chart. You can see here that I am using my trading view chart on Bitcoin on the daily time frame, and make sure that everything is nicely spaced. Step 1, you have to identify clear swing highs or swing lows. When you're looking at an uptrend, you want to look at your swing lows. When you're looking at a downtrend, you want to look at your swing highs. For right now, we are going to actually focus on this downtrend that we saw on Bitcoin. Step 2, find your trend line tool. Here you can see it is in my favorites because, of course, I use it very, very often. To find this tool, you can also come to your line tools and find it as the first tool under your line tools. Star it so that it adds it to your favorites. And then your third step is to actually draw it in and connect those swing highs. Then you want to extend the line and actually extend it into the future. This is looking back in time, but when you draw these lines in, you want to be drawing them in as early as possible. As soon as you see 2 to 3 touch points, then you extend the line into the future for future price action. Once you have drawn your trend line, you want to validate it. To validate it, first you want to see, are there at least 2 to 3 touch points? Try to get more than 3 touch points. Very important is that there is a decent amount of space between these touch points, and try to look for regularly spaced gaps. Also, try to look for trend lines that are not too steep. Ideally, you want them to be around 45 degrees. Another important note is to always make sure you zoom out, draw your trend line in, and then use multi-time frame analysis to have a look and see the significance of that trend line. This gives you greater perspective on the larger market context. Here we can see the really big wicks at the trend line, which tells us just how important the resistance is at that trend line. For the third part of this lesson, let's have a look at the different types of trend lines. Number 1 is an uptrend, ascending trend line. So when you see price in a nice uptrend, you can draw in your ascending trend line. Ba-ba-ba-boom. And we're going to talk about a very nice strategy to trade this. The other trend line is the one that we have been speaking about, which is a descending trend line for a downtrend. Another trend line you can look at is your flat trend or your horizontal trend line, and this is straight up support and resistance. Beautiful. Let's go into some strategies on trend lines. Number 1, let's look at the bounce entry strategy. This is a beautiful example right here on this uptrend on Bitcoin. We can see a beautiful trend line that was starting up on Bitcoin, a beautiful, beautiful uptrend. And here we can actually see the bounce strategy that occurred and gave us a very, very nice entry. Watch my RSI tutorial in my crypto trading tutorials if you need to, but here we can see that it tipped beautifully into the oversold zone and gave us confluence for our entry on this bounce trading strategy, which is of course to find the ascending trend line and then watch for the pump and wait for the bounce, which confirms the continuation of the uptrend. Remember, whenever you are entering into a trade, you need to understand your risk to reward ratio. This, of course, was one of the best trades we have ever seen on Bitcoin. But here we can see, always make sure that you keep your stop loss below the previous swing lows and always take your target out to at least a 1-to-2 risk to reward ratio. And here we can see our 1-to-2 risk to reward ratio TP was hit absolutely beautifully in this trade, and very nice confluence came in with our RSI. The second strategy that we're going to look at is the breakout strategy. This is a beautiful example here on this trend line, and this is actually going to show us two strategies. You want to, of course, draw in your trend line. Then when you see a break of that trend line, you want to look at entering your trade. We're going to go into some more detail on how you can get even better trades by using a parallel channel from these trend lines. We can see here that price had been consistently trying to break this line and failing with extreme significance. And then right here, we got a candle close above the trend line, which can signal us to go long. Remember to always drop in your long trade drawing tool, and always make sure that you bring your stop loss below the previous swing low with some buffer below the wick for volatility. Then always make sure that you are working at least a 1-to-2 risk to reward ratio to one of your first TPs. The third entry strategy, and my personal favorite strategy, because this is a pro strategy, this is how you can really limit your risk. And you know what? Be the sniper, right? Be the sniper. Rather take less trades, but make your trades absolutely beautiful. There are things known as fake outs. Yes, this breakout trade worked out beautifully, but we will go back and find an example where actually this has failed. And the way to avoid this is simply by using your retest as your entry. And I would urge all of you to use this strategy. Here we can see the absolute OG way to trade this and to be very safe would of course be to trade the retest of the flip of resistance into support from that trend line. Really, really nice. And always bring your stop loss down below the previous swing low. Always make sure you have a risk to reward ratio of 1-to-2. Very important, of course, at all times to understand when trading any strategy is risk management. Number one, have your stop loss below the trend line and below the previous swing low for your longs. Number two, very important, always only ever risk 1%, 1-to-2% of your portfolio at your stop loss. This is one of the golden thumb rules of crypto trading. This means that you can lose 1,000 trades and still have capital preservation, because every time you lose a trade, that 1-to-2% gets slightly smaller, and it also allows you to have the beauty of compounding on your account, because every time you win a trade, that 1-to-2% will get slightly bigger. One pro tip I can give here is to draw in channels from your trend line. Here you can see that if you drew out the parallel channel from your trend line, you would of course be given the beautiful median support and resistance flip, as well as your bottom extreme support and resistance. And if you want to trade these trends like a pro, you want to be entering a hedge long from the bottom and a hedge short from the top, and keeping both of these trades open until one of them hits stop at the break of the range and the other one goes into parabolic profits. Another pro tip is of course to always use multi-time frame analysis. Always make sure that you do zoom out to check the ultra confluence of your trend lines. We can see here these beautiful wicks which are showing us just how important that trend was in terms of significance, and we can also see the beautiful wick which came in on the retest, giving us even more significance. Try not to fall for these pitfalls. One of the major pitfalls is forcing a line with too few levels of confluence. So if you see a trend forming and there are only two, try not to give it too much respect as of yet. Wait for at least 3 touch points before you start to use this trend line. Also, try to watch out for lines that are overly steep. They're more likely to give you false breakouts if the lines are too steep. One of the major pitfalls is ignoring the larger market structure and ignoring the fundamental analysis. News events can happen which can absolutely invalidate the trend. Number 1, identify your 3 touch points at least. Number 2, draw in your trend line using the trend line tool and extend it for future price action. Number 3, make sure you validate your trend line in terms of the spacing between the touches of that trend line, and try to make sure the angle is as close to the ideal 45-degree angle as possible. Number 4, plan your entry, either the bounce, the breakout, or the retest. Remember, the bounce is the more beginner signal, right? And the breakout, slightly more advanced. The retest is really the pro strategy that you want to be learning and understanding. You'll get less trades, but your trades will have a higher win rate. Number 5, set your stop loss, set your target using your risk to reward ratio, and make sure your stop loss is below the trend line, below the previous swing, and then use your confluence of your other indicators like your RSI. You can even use more advanced indicators like your MACD or your money flow, and then make sure you use your Fibonacci levels for your take profits. This is a little bit more of a pro level, but make sure you are always taking gradual profits on your trade. If this was your stop loss below the previous swing, this was your major TP, you can use your Fibonacci extension on this trend to give you gradual take profit levels. Thanks for watching, crew. Show the love with a like and a share, and subscribe to the channel if you're new. Also, be sure to join my Trading Academy on Telegram, and of course, always play from a position of power and strength.